Hey everyone, what's up? George here from the Millionaire Project. So I kind of just want to make this video and give you guys a little market update. I know it's been crazy and a lot of you are probably wondering what is going to happen next or where we stand as a market whole. So looking back at last week, obviously we had a shortened week because of the Thanksgiving holiday, which by the way, I hope all of you who celebrate had a wonderful Thanksgiving. So markets were closed on Thursday and they closed early on Friday. And as you can see on Friday, markets gapped down. We dropped over 1,000 points, and the reason for this was because of the new South African COVID-19 Omicron variant. Obviously, this raised a lot of concern and put a lot of fear in investors, causing this drop, putting us at a pretty key level here as we broke below the 10 and 20-day moving average lines, and we're heading towards this 50-day moving average line here, which we used as a support. So now we had a range for the day, which was between the 50-day moving average line, which was around 455, and the 20-day moving average line, which was around 464. So something to note was that we mentioned markets may bounce, and they sure did. But something to look at here is this candle. Let's dissect it. So looking at it, you could see that there was a lot of movement through this day, and there really wasn't any market sentiment telling you where we were going to go. And bulls were just kind of trying to push the price up towards this range here, and bears were trying to push the price back down. And the day pretty much ended at a neutral point, not giving us much sentiment. So what this tells you about the volume is that even though we closed above what we opened at, a lot of this volume here is still selling volume because we came down all the way to this point here. So this told us that we were at risk of falling further down. And as you could see, we sure enough did and came down right to this 50-day moving average line here, and we used it as a support point. Something to note is that on this drop here, the volume was stronger than on our first drop that we had on Friday of last week. So this raised a little bit of concern, telling us that we may come down even further to potentially break through this 50-day moving average line and come down to test the 100-day moving average line. So a lot of things were going on this week, ranging from talks about inflation, Fed hearings, which we had yesterday and today, and we're going to get into that in a minute. We have job reports. We have several retail earnings, which are also key because they could tell us a little bit about inflation, a little bit more than what we already know, and give us a bit of a direction. Just a lot of reports coming out this week that can affect the market. So a big reason for the drop yesterday and today is two, really. So yesterday, we began the Fed hearing where Fed Chair Jerome Powell mentioned that he believes we may have to start tapering earlier than what we originally thought. And this is not something that investors like. And as soon as we received that news from the hearing, markets began to sell off and we began to come down for the rest of the day to where we stopped at this 50-day moving average line here. Today, talks resumed, but the main reason for today's drop was not necessarily that. The main reason for today's drop was that we also received news that the new Omicron variant, we had a case detected in the United States. And obviously, this is going to be crucial for markets because every time we've had some sort of headline relating to COVID, if you remember last time we got a headline about the new Delta variant, markets reacted not quite as strong, so to say, but we did come down. So this variant is raising a little bit more concern for the market, not necessarily because of COVID itself, but because we are at the point where we are at. As I mentioned, with tapering and inflation and everything going on, there's just a lot on the plate right now, and investors are very hesitant going into the new year. So in terms of the chart, obviously today we came down some very strong selling volume, and looking at the RSI here, you can see we're approaching a oversold position and the MACD is starting to come down. So we are likely going to bounce. We may come down to test this 100-day moving average line here around 447 before we do actually bounce. And then we will have a range between the 50-day moving average line, which is at 456, and this 100-day moving average line, at which we will either come up and break above this 50-day moving average line and continue in a bullish trend towards the end of the year, or we may come down and test this 100-day moving average line, bounce around this area for a bit before potentially coming down even further to maybe even test the 200-day moving average line. This is a bit more unlikely. What we personally believe here is that we will come down and test this 100-day moving average line, bounce a little bit before coming back up to test the 50-day moving average line until we break and continue to move up and rally into the end of the year. for what is known as the January boom or the Santa Claus rally. Historically, markets rally and move up towards the end of December going into January as we approach the new year. So our sentiment here is that we will come down a bit further before bouncing up and coming back up to test this high here again before we come up and rally into new highs for the year.